Ken Van Leeuwen's with us, Managing Director, Van Leeuwen & Company. I'm so glad that you were able to be with us. We have a lot to talk about. I want to get into AI and some of the growth names. I know you have NVIDIA, Broadcom, Microsoft on the mind, but let's just talk about the year that was. How did you feel about 2023?
Well, Nicole, 2023 was a year of ups and downs. You know, we were doing well at start out of the gate. The Magnificent Seven kind of led the rally, and then we, of course, dipped on that day. We pretty much gave it all back in that March day when Silicon Valley Bank went bust. And thankfully, the FDI stepped in to guarantee those deposits, because then, as we know, there was four other institutions went bust as well. So that, of course, caused concern. And then, of course, right after that, pretty much the AI boom started, and we rode that with the market broadening out pretty much until July, that latter part of July, and then we started the ski slope downwards again till basically late October, because during that time it was all about Fed and the interest rates and the budget crisis and everything that was going on, you know, Israel, Hamas, and there were a lot of events that were going on.
Without a doubt, and so much about the Fed and how they drove this market right up, you know, when you think about all those hikes, more than 10 to 5.25%. And then the pauses, it's just so different, because as we were going into 2022, it was about how they were going to start hiking.
Right.
Now, as we go into 2024, it's more about how they'll be cutting, right?
Yeah, when we got that news a couple weeks ago, of course, when he said, well, Powell intimated that we're going to start to get rate cuts. Right. So the market took off that 500 points a couple weeks back. So sure.
And that should help things along. I mean, do you think that 2024 could be a better situation? Lower oil, maybe inflation will continue to come down, rates will likely come down. Do you see a good setup, or are you worried and feeling more cautious?
No, I'm looking for a good 2024. But I think what we're going to start to get, you know, we still have those macro events. You know, we have oil. You know, we have the uncertainty in the Mideast. We now learned a week or so ago about the Red Sea and what's going on there. And the Fed, you know, because the Fed, the New York Fed chairman, I believe is his title, last little while ago said that he didn't see rate cuts so quickly. So, of course, that took the market down a little bit. And then, of course, we got the big event that's happening in 2024, which, well, there's a couple big events, recession or no recession. And then, of course, the presidential election. And that is always fraught with a lot of interesting potential outcomes, to say the least.
Right, understood. Let's get to some of those growth names and the Magnificent Seven, AI. I mean, they could be talked about separately or together. Your thoughts?
Well, you know, a lot of people want to argue that the Magnificent Seven is now expensive. However, those are the companies that are doing business, and those are the companies that are spilling off a lot of excess cash flow. So people are definitely looking to want to invest in those. We can see that continuing to happen, you know, especially in the first month or two, because the market's making new highs. So we see naturally that people are going to want to go into those names.
Right.
But now we've got some new names in part of that Magnificent Seven. It's like Broadcom is a really interesting name, because everybody wants to talk about NVIDIA as the chip name of choice, but we also see Broadcom as a potential winner there as well. So we're seeing the market broaden out in general right now.
Right. I want to hear more about some picks that you think, as you mentioned Broadcom briefly, some names that you think maybe could work in a portfolio for the longer term.
Well,
or at least the first half, let's say, of 2024.
You know what we think also is with the advent of interest rates declining, we're starting to see people look for yield again in stocks. So we see the potential for oil stocks. I mean, we're looking at Exxon and Chevron with some very nice dividends. We're looking at some of our stocks like, for example, Bristol Myers with a 4% dividend. And then we're looking at a combo of some of our growth names, right? Like if you want to call it growth, we're looking at some of our retailers. We still like the retail space a lot because of this impending quote unquote recession or soft landing, whatever you want to call it. So people are still looking for value in that area. So we like that. And then if you want to be a little bit more conservative, you have to be in the market, it's our belief. So people looking for companies with dependable earnings, like United Healthcare, for example, or Costco is another good one. And Costco is going to be declaring a dividend this week, a special dividend. So that's going to be an interesting cash flow back to shareholders.
Talked about that at the end of the year in one of the last meetings. As you look at consumer behavior too, the likelihood, we've had a very tight job market, and the idea is that we may see a little bit of loosening for the job market, and maybe unemployment will go up. But at this end of November and December, we're looking pretty good, right? You talked about August and September and October were tough. And then things turned around, but investors were making money, let's say, as the market was moving up, but consumers were using credit cards, buy now, pay later. Some of those credit cards had the highest rates. We surpassed $1 trillion. And the question was whether or not people felt so confident that they have a job and I could pay those credit cards, or were they getting caught?
Well, I mean, that's going to be born in the statistics that we're going to hear in the first quarter, right? When we start to get the read from the big card companies in terms of did the balances increase. So that's going to be a telltale sign. But Nicole, the question that I always have is I wonder, does the consumer have a different mentality now after COVID, right? Because I think one of the things is, have our buying patterns changed? The way we use credit, the way we think of money. I think that maybe there's some behavioral changes coming out of COVID still. Remember, and in March, we're going to have the 4th anniversary already of COVID. So I think people want to live. That's the other thing I'm seeing with my clients. They're still concerned about their long-term futures, but they want to enjoy their life now.
Right? And, it's different than the grandparents who never took a trip. They didn't go out to dinner, but a different thing. So let's just review the names that you liked. You mentioned NVIDIA, Broadcom, and Microsoft, right?
Yes.
Dividend payers.
Exxon, Chevron, Bristol Myers, for example. We're looking at stocks with a dependable earnings if we do see this slowdown, like United Healthcare. We're also liking Costco. Dividend paying stocks, some more are Wells Fargo, Snap-on Tools. Hubbell, which is a name, and maybe Snap-on and Hubbell are not necessarily known by the customer too much. But again, Snap-on Tools, we know the trucks, they're the leading delivery for tools to work on electric cars. And then you've got Hubbell, which is upgrading the electric grid, which is part of the infrastructure money that's now being spent in the economy. So those are some names as well. And then, of course, our retailers that we happen to like because they're just good growth at a reasonable price stories, or our TJ Maxx and our Ross stores.
And healthcare, we've seen obviously some merger and acquisition activity in the back half of the year that I was thinking of, but just going forward, I actually was looking through in Barron's, they had 6 strategists, and 4 of the 6 actually said they liked healthcare for 2024.
Sure, and healthcare, the issue though, we like healthcare also, but don't forget, healthcare is usually an election issue. The current administration has made it an issue already. So how is that going to be playing out is going to be of interest to us as well. But again, if I can buy Bristol Myers with a 4% dividend, and there was recent insider buying in the stock, that's something I may like.
Right. And, I'll be using this stat until the new year rolls in, but it was about the pauses, and they went all the way back to the 1950s, and it turned out that on average, and I'm reading, stock and bond returns had been higher during the pause period than actually after the first cut. So I guess that's the time to go for it.
Well, right, and now I believe even Fed fund futures are trading, or they traded last week, I think, where they think the first rate cut could be in March.
Yeah, so we'll see.
We'll see.
Yeah, we'll have to see as we roll into the new year. Ken Van Leeuwen, thank you so much for being with us, and a good look ahead and a look at the year that was 2023. Thank you.
Thank you.